Welcome to the Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Marav Marciano on CJAD 800.
Good afternoon, everyone. You're listening to the Real Estate Show, and I'm your host, Terry Kilakos, chartered real estate and mortgage broker, as well as president and founder of Northeast Real Estate and Mortgage Agency. Today, we're talking about the effects of COVID-19 on commercial real estate due to the government asking all non-essential businesses to close their doors for over 2 months now. How is this going to affect commercial real estate? Will we be seeing an increase in commercial inventory in the coming year? Are we going to see a decrease? We'll be discussing all of this and so much more on today's Real Estate Show. As usual, due to certain restrictions, my beautiful co-host, Marav Marciano, will not be joining me in studio, but she is remote. And from what I gather, she's actually just come back from a nice long walk with the kids. How are you, Marav?
Good. How are you?
Excellent. How was the walk?
They didn't want to do it.
What? What?
They wanted to go in the pool. It's fine.
Okay. All right. That's fine.
Outside.
This has been like the challenge, I think, for every single parent out there having children, at home during this whole pandemic, right?
Yes. It's been quite testing and taxing on us parents, I have to say, especially parents who have to work. So you find yourself being a teacher, a cook, an employee, an employer, a cleaner, and everything else that comes along with it. But hopefully it'll be over soon.
Yeah. Well, let's add one more thing to it: a radio personality as well. So. We would love to hear from our all our commercial real estate investors and landlords out there who are listening to the show right now. How this crisis has been impacting you. Have you seen? Are your tenants paying? I'm curious about that. Are your tenants not paying? You can join the conversation by calling in with your questions at 514-790-0800, or you could text in to 514-800. You can also watch and comment on Facebook Live at facebook.com/Northeast Mortgages. And if you haven't done so already, please take a moment to subscribe to our YouTube channel, which is newsonthego.ca. And for everyone that kind of is used to, watching this show on our Facebook page or on YouTube, just know I forgot to change this little 9-volt battery that I have in this little device that interfaces me with the studio. So therefore, there is no audio on the Facebook page. So the show will go on there after I get home, and David Simon is kind enough to send me the audio pre-recorded. So recorded, I mean. So before we kind of kick off the show and get into like the commercial real estate segment of it, if you will, let's do a little bit of a market update. Marav, I mean, we saw a whole bunch of stuff kind of came up this week. And one of the main things, and we were talking about it this morning, was about this unrealistic report that came from CMHC's CEO this week, mentioning how real estate prices could, and there's quotes around that, drop by as much as 18% this year. What's this about? I have a few predictions. I want to hear what you have to say on this, Marav. But, I predict that CMHC, they're coming in and they're asking for an increase from down payments from 5 to 10%. I think that is going to basically be a reason for people. It's going to force people to use that first-time home buyers incentive, which was a big flop as far as I'm concerned that the government did. I think that as well, they'll probably be asking for a bailout, which is, whenever things get tough, this is what we see companies doing. They put their hand out, they're panhandling to the government for money. And I think that they're going to be asking for an increase in premiums. And they're going to say, well, it's justified because, look, there's all these defaults. But, I think they're mixing up defaults and deferrals, right? What do you have to say about this, Marav?
Look, as agency owners ourselves, we talk to a lot of heads of agencies, and we read a lot of the reports, and we follow statistics, and nothing is pointing towards a decrease of that size between 9 to 18%. I'm not sure what Siddal's goal was when the House of Commons opened up, where his opening comments were that this might happen. And again, it's a big might. I'm not sure if it's a scare tactic for the public.
I think it is. I think it is. And, if you look, Benjamin Tal, who's the chief economist for CIBC, and as far as I'm concerned, I think the man is a genius. He's the first economist that I ever listened to. And he has been spot on in every single thing that he has ever said. And Benjamin Tal thinks that this is complete, pardon the expression, you know what I want to say, people, right?
Yes. Not founded in reality.
No, exactly. And we see the same thing with the Remax CEO, who kind of came out and said the exact same thing, and he's actually echoed word for word what we've been saying over the last little while, right?
Yes, less supply, higher demand. Obviously, the prices are not going to go down. It's a statistic that makes no sense. I'm not sure where this came from. Again, I think there is an ulterior motive to it, most probably a bailout or an increase in premiums, or a push towards using that couple of $2 billion that was earmarked towards the first-time homebuyer incentive, which was never really used. Barely a few million of it was used. So it is very possible that that's what they're aiming towards.
Yeah, we've seen it. I mean, we've been to conferences, and I kind of keep repeating this over and over again. If I look at the amount of brokers that have used the actual program, is slim to none as far as the first-time homebuyers incentive goes. We were at a conference not too long ago, and the presenter kind of asked all the mortgage brokers, and there was about 500 in the room, and they said, how many of you have had clients that have used the first-time homebuyers incentive? I think there was 2 hands that went up out of the whole room. I think that it was a big flop, and I have my opinions on it, which for those that want to hear it, they can kind of go back to our past shows, and they can actually listen to it, and you could do that on useonthego.ca. The other thing is the CERB is coming to an end in mid-June, correct? And we're going to, question is, are we going to be seeing an easier qualifying time for people once that is gone and people are back to work? Well, guess what? There hasn't really been a decrease in the amount of people qualifying, because even the people that are on this, if it's a temporary layoff, and we have proof that it's a temporary layoff, a lot of times they could still qualify for the mortgage, correct?
Yes. Now, obviously, if they don't have a return date, then that makes it a little more complicated.
100%, absolutely. Okay, so let's talk a little bit about multi-residential, and I mean we're quickly running out of time. We're going to go right up against traffic on this, but let's talk a little bit about multi-residential. What are we seeing when it comes to the multi-residential market right now, Marav?
Still very strong. Still, construction starts are still happening. Not as strong, obviously, as other provinces like Ontario, but we see a lot of Ontario developers coming to Montreal. So definitely, there's a high demand for rental units. So on the multi-residential front, we see it still extremely strong.
When we come back, we're going to be looking at rent subsidies available to commercial tenants and how to get to applying for that.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Marav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we are looking at the effects of COVID-19 on commercial real estate, and the texts are coming in fast and furious. You can also call in with your questions at 514-790-0800, or again, you can text in to 514-800 in order to join the conversation. Marav, are you still on the line?
I'm still here.
Awesome. We got a few texts that came in, which are very interesting. But I do just want to add one thing in our little market update that we were doing, and that has to do with inflation. And what we're seeing right now is inflation has taken a huge nosedive, and it's to be expected. I mean, you know, we're living in a time of complete uncertainty. We're living in a time where, you know, people are not buying the way that they were before, although Home Depot lines are ridiculously long. We're not going to get into that. But we're seeing inflation right now at minus 0.2%. Now, the last time that inflation was at this level, it was on May 1st of 2009, and we know what had preceded May 1st, 2009, which was the crash of 2008. So we're seeing inflation at a ridiculously low point right now. I think that this is a very good indicator that the Bank of Canada is not going to be moving, obviously, the overnight rate north at any point in time, because the minute they do that, it actually drops inflation further. They don't want it to go any lower than where it's at. So I think that what we might be seeing is we'll probably see the overnight rate stay where it is, if not, maybe even drop a little bit more. So that remains to be seen. Okay, Marav, you ready? We have ready. A slew of texts here. Okay, so first and foremost, this is just an FYI. CERB ends October 3rd, 2020. It was extended. Yes, it's true. It was extended. Was it extended to October, though? I thought it was till August or September.
They haven't announced the... I'm going to look into that. I'd rather not pronounce myself.
Okay. Now, next question. Many of the government programs out there are hard to qualify for so many of us business owners. We have no help. I agree. Yes. I agree.
If you look at the criteria to qualify for some of these, definitely it makes it a bit hard to qualify. For example, the rent subsidy, you have to come to an agreement with the landlord. If the landlord doesn't want to apply for it, then obviously you're at a standstill. Also, you need to see a huge drop in your revenues in order to qualify for that SECRA, the CECRA, the Canadian Emergency Commercial Real Rent Assistance. You need to see a decline of 70% in your revenues. And of course, the way that the rent subsidy works is that 50% of the rent is paid by this subsidy, and I'm going to call it a loan subsidy, and I'm going to explain to you why. 25% is paid by the renter, and then 25% is supposed to be forgiven by the landlord. Now, if all the conditions are respected, then that loan becomes forgivable for the landlord. So a lot of landlords are afraid of this program. They're not sure if, they could find themselves with a loan that is not forgiven, so they have to make sure to comply to the rules. And the tenants have to fit in that category of having 70% less decline in their revenues.
Yeah, and that actually lines up with a question that we have here from Mark from DDO, who's asking, "Hi Terry, very informative show. Small semi-commercial landlord and DDO. One of requirements in the CECRA application is rent roll. Can you kindly explain what rent roll is? Also, in my case, I offered my May rent for free. Is it a good strategy to keep the CECRA as another possible alternative? I was thinking I can offer this to my commercial tenant in case he will ask me for another month's rent for free, which I cannot absorb. Your advice is always appreciated." Mark from DDO. So, Marav, I mean, this is we've heard this countless times at this point, right? This question.
Yes. So basically, they're asking for the rent roll. That's the gist of the question, right?
Well, yeah. He wants to know what the rent roll is. So
the rent roll is basically your list of all your tenants and how much you're collecting from each unit. So typically, when you have multiple units, you have a rent roll. You have that big, if you want to call it a spreadsheet, with all the tenants listed in there, how much they're paying, when they sign their lease, etc. So obviously the government wants to see that if they're going to extend that loan/subsidy to that landlord. They do need to see some of that data up front.
Interesting. So obviously that does make a lot of sense. Now, one of the other things is one of the other big programs is the Canadian Emergency Wage Subsidy, which covers 75% of your payroll if you qualify for it.
Yes,
Do
so
you
that
want
one
to talk
too.
a little bit about
That one
that?
too. Yeah, absolutely. That one too. It's again, you have to see in that first month a 15% decrease in revenues, and then the subsequent months a 30% decrease in your revenues. And of course, there's two different ways of calculating that. You either do an average of January, February, and then you can compare it to March, or you look at March of the previous year, March 2019 to March 2020, April 2019 to April 2020. So some companies don't qualify for it, especially if they continued their business online. So again, there's help, but not necessarily enough help. And then, of course, you've got that Canadian Emergency Business Account, which is a $40,000 loan, $10,000 of it, which will be forgivable if you pay it in full by December 2022. And that one, you need to have a payroll expense of between $20,000 to $1.5 million annually. And we know a lot of businesses who have a payroll more than $1.5 million, and then they don't qualify for that as well. So it's a little frustrating for businesses. And then you've got the self-employed people, the one-man shows. Those guys have a hard time fitting into any of those boxes. So we're definitely trying to figure things out with respect to the government programs.
Lastly, well, you know what? You want to stay on the line while we get Luciano after the news? Well, yeah. Would you?
Sure.
Yeah, you feel like staying on the line? Okay, because I think that this question that actually came in is actually really, really important, and it has to do with lenders pulling back financing. So I'd love to hear your opinion on it. I'd love to hear Luciano's opinion on it as well. So when we come back, we're going to be talking to Luciano Di Orio from Cushman Wakefield about what he's been seeing in the commercial real estate market. Stay tuned for news.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Marav Marciano on CJAD 800.
You're listening to The Real Estate Show, and today we are looking at the effects of COVID-19 on commercial real estate. You can call in with your questions at 514-790-0800, or you can text into 514-800 in order to join the conversation. I'm sorry, Marav, I kept you on during the news because I really wanted you to answer this question. And it's I hear that some lenders are pulling back financing on commercial real estate after approval was already issued. Have you seen that?
On the commercial side?
Yes,
I have seen that. On the residential side, no. I have seen it on the commercial front because, of course, in a commercial property, what makes that property strong is the tenants. So there's any kind of chance that those tenants are not reopening, again, all depending on what happened with those tenants, it could affect your financing. Absolutely.
100%.
So we'll see. We'll see now how banks are going to handle new applications.
Okay. Thank you, Marav, for joining us. That was the voice of Marav Marciano, my beautiful co-host and wife. And hopefully next week she'll actually be in studio with me. Now we're going to take a small trip over to Saint-Laurent, where we've got Janet on the line, who has a question about refusing a rent increase. Hey, Janet.
Hello. I enjoy your show so very much.
Oh, thank you, Janet.
I want to know if tenants
Yes.
can refuse their rent increase because of the virus.
It's not specifically about because of the virus that they could refuse it, but they could refuse a rental increase, and at that point you would have to go to the Régie de Logement to actually fight for it. Now the problem is that the Régie de Logement has been closed, and they haven't been, all this stuff is being postponed. So I think that you would probably be better served having a conversation with your tenants and trying to negotiate with them, because chances are when you go to the Régie de Logement, they're going to come somewhere, they're going to, if you want to increase it by $20, they're going to say increase it by $10, So
Yes.
I would, that would be the best advice that I can give you, Janet.
Thank you very, very much. I
You're-
enjoy your show so very much every week.
Thank you so much, Janet. Have a great day. And now, without further ado, we've kept him waiting long enough. We have Luciano on the line, and not Luciano Papia, that devastatingly handsome news anchor that we have at CJAD, but Luciano Di Orio from Cushman Wakefield. How are you?
Hey Terry, how are you?
I'm good. And you're devastatingly handsome also. I mean, let's be honest here.
Thank you. I can't believe there are two Lucianos on the same day on the same show. But
I know.
Honored to be with you today, and unfortunately distant, very distant, but on live just the same. So thanks for having me.
Absolutely. It's great to have you on. So talk to me, my friend. What's been going on? Have you seen a slowdown on the commercial front since this whole COVID crisis started?
I've seen companies, I've seen occupiers of space and investors of space trying to figure out what the next move is. I mean, I think we're all in the same storm. On March 12th, when we were rushing the grocery stores to get toilet paper and to figure out what to do with our children on March 13th, everything came to a halt, and deals were in place, and people were active in doing transactions, and then everything came to a halt, as our premier had said, on va mettre le Québec en pause.
Ouais.
And so now we find ourselves on the eve of kind of a reopening of sorts. Tomorrow we'll have a lot more stores, certainly on the island of Montreal, opening up. So I think from our perspective, I guess I look at sort of the three asset classes that we deal with: the office side, the industrial side, and the retail side. And each asset class is dealing with their own preoccupations based on what we're living in terms of this COVID environment, if we want to call it that. I like to call it the pre-vaccine environment, because I think we're all hopeful that there will be a vaccine eventually, and we're going to see different things.
Yeah.
So Terry, from the office perspective, I think your office occupiers are looking at kind of getting back into the workforce, maybe not having 100% of their workforce in the workplace, and so there'll be some employers are going to be encouraged to work from home, or if they want to work from home, they'll be given that option. And so I think what we're going to see over the next few weeks is a rollout of companies allowing their employees to come back, but probably not more than 25 or 30% of the workforce going back into the workplace.
So do you see? Okay, so let's jump over to retail for a second, because
Sure.
I mean, for the majority of the stores have been closed literally for the last 2 months. Yeah. How do you see? Retail's been hit pretty hard. A lot of people are saying that some stores are not going to even reopen. What do you foresee there?
So depending on what type of retail, I think that if we sort of follow the news over the last little while, a lot of the apparel retailers have been getting hit, and it's actually on with our colleague Elias Makos a couple of weeks back, and I talked about how we're not going to parties, so we're not going out, we're not getting dressed, we're not buying shoes, we're not buying clothes. I mean, funerals we're doing over the internet. Weddings are being postponed. So the apparel business, I think, is getting hit hard. So it'll be interesting to see how they react tomorrow when things start to open. Because of course, we talk about it won't be the same. You can't be walking into a store and trying on everything and kind of leaving it to the salesperson. It'll be probably limited chance to try clothing. The clothing that you do try on has to be put in a separate enclosed area for 24 hours because it'll be steam cleaned, and it'll be, they'll make sure that it doesn't get into the hands of someone else right away. So there's going to be some physical restraints. So shopping's not going to be the same thing. Inventory on the apparel side. I mean, some of the fashion that was slated for spring and summer were June. Yep. Some of these retailers are thinking about, the fall collections and the winter collections. So that'll be interesting to see how they handle this inventory and where to put it in and at what cost are they going to you'll probably see some sales because some of this stuff just hasn't moved for the last 2 or 3 months.
Interesting. We just have a quick call here from Harry in Montreal, who has a question about city evaluation on condos. Hey, Harry, how are you?
Hi, good afternoon.
Good afternoon.
We received the city evaluation for our condo in NDG.
Yep.
And I'd like to ask the professional, in general, if I were to sell, what percentage do people usually ask for or get over and above that evaluation?
Okay, thanks for the question, Harry. So, look, and I'm actually going to let Luciano chime in on this also, but for me, when you're talking city evaluations, they literally have nothing to do with what the actual value of your property is. City evaluations, they come, it's a point in time, it was 2012, then we saw 2016 timeframes that they were used to determine what the values were. So it's a point in time in history that your property was worth that. Now it's probably worth more than the city evaluation. I have some people that use that as a metric to say, well, my house, I have a $300,000 condo, a city evaluation, so I should be selling it for $350,000. But it's not something that I would use as a realtor as a metric. What about you, Harry? Sorry, I was about to call you Harry. Luciano, what would you say to that?
I transact in the commercial world, but I can tell you as an investor, I would say I agree with you, Terry. I think the really one doesn't have to do with the other.
Perfect. All right, so that's good. Thank you for the question, Harry. Okay, so now let's jump over to office space. Okay, so have you seen companies kind of change the square foot per employee allocation that they've been using on the office space front?
So right now, so about office space, so there's, leases are, I always say leases have a beginning, a middle, and an end.
Right.
A company that has a lease that is coming to its end of its life, end of term, I think those companies are going to be starting to look at how they're using space.
Sorry, Luciano, I'm going to just cut you off for 2 seconds.
You're listening to The Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Marav Marciano on CJAD 800.
Thanks for tuning in to our discussion about commercial real estate. Today we have Luciano Diorio on the line. Sorry, I cut you off before, Luciano. Do you remember where you were?
No worries. Yes, we were talking about sort of leases and their term, beginning, middle, and end.
Right.
So companies that have a lease in place and have term on their lease, they have a couple of things that they can do. One of them is certainly they want to make sure that the health and safety of their employees comes first. And so what they're doing is they're going to have physical distancing rules amongst their employees in their own office spaces. And like I said, I think what we're going to see is not all of the workforce coming back, but probably about anywhere between 10 and 30% of the employees coming back into the workspaces. So that'll allow employers to give the physical distancing that they need to get.
Okay, so you don't see them having to increase the amount of square footage because of physical distancing.
Not right away, but perhaps somebody whose lease is coming up.
Right.
And has to do something, I think they're going to look at acquiring office space in a different way, and probably not and change the density. So giving people more space and allowing people to basically to distance within the office if they're going into a new space.
Well, I got to tell you, I mean, just in our office, I'm kind of looking at it. We're officially opening the doors tomorrow, although we have been working from home and whatnot. But I mean, the doors are officially opening, and I'm looking at it and I'm going, how am I going to fit everyone in here? We have to put distance between everyone. So I don't know. It remains to be seen. Yeah.
Well, and some companies are giving an alternative schedule. So they're saying, Terry, you come in on Monday, Wednesdays, and Fridays, and someone else comes in on Tuesdays or Thursdays, or maybe even shift splits if they can allow to do that. The other thing too is on an office tower, we're going to have to be going up and down elevators, and the elevators have social distancing rules as well. So we can't be cramming in there like sardines like we did in the past. At least not until a vaccine is out. So all of that, I think, tenants are working with landlords, and landlords and tenants are working with the authorities to see what are the best practices. and we're consulting a lot of our clients on that kind of thing in terms of how to distance, provide safe distances. And of course, there's also a lot of, if you think of all of the touch points in an office space. So when you walk in, touching the door, washroom doors, kitchens, and so on, figuring how to make those surfaces cleaner and how to keep those clean.
Okay,
it's going to be something to look at, sure.
Interesting. We've got a quick call here from Daniel, who has a question about his landlord. Hey, Daniel, how are you?
Hi, fine, thank you. My landlord is expecting an answer from me tomorrow.
Yeah.
The people in my triplex are the only ones staying, and so he wants to do renovation and is asking me to leave the apartment in August and maybe September. And with COVID, I'm just wondering if I can.
Have you accepted his? No, you haven't accepted it yet.
No, he hasn't given me anything in writing either. He's just phoned.
Oh, yeah, well, okay, he can't really do that, especially, I'm assuming this is on the residential side. This is a triplex, I think you mentioned,
sorry,
right?
I only realized after I called in.
No, that's okay, but it's okay. Look, he cannot just kind of say, well, I'm doing renovations, I'm calling you, please leave. There's a whole procedure that needs to be followed, and definitely, I mean, in this kind of market, it's the same thing. There's a procedure that needs to be followed. He would have to send you a formal notice that he wants to repossess the dwelling so that he can do renovations. Once the renovations are done, after he's completed that work, he has to give you the opportunity actually to come back to that space as well. So you don't have to accept it if you feel that you're not going to be able to go somewhere else. Normally, the Régie de Logement, again, would be someone that would be stepping in for something like this. But in this case, the Régie de Logement, again, I'm not sure when they're going to be seeing people. So, Luciano, I'm not sure if you have anything to say on that. I know that your specialty is commercial, but maybe you can chime in on this as well.
No, unfortunately, I don't have anything to add to that.
Yeah. Okay. So Daniel, what I would do is pick up the phone, call the Régie de Logement, see what they have to say. But I would, I would refuse if you're uncomfortable with it, if you feel like you're not able to go somewhere else, and then just ask for a hearing at the Régie. Okay.
Okay. Thank you very, very much.
You're very welcome, Daniel. Okay, so let's change directions a little bit again, Luciano. How about industrial space? There's a lot of companies kind of going online right now. There's a lot of demand for warehouses. Are you seeing an increase in industrial space going up?
Yes, we do. We are seeing it, and what we actually leading up to the pandemic here, and leading up to the shutdown and confinement, Montreal's market was red hot, and we foresee it to continue. There's really not a lot of product out there, so someone who's looking for a warehouse space, certainly on the larger warehouse spaces, they were harder to come by, and they had to be built. And one thing about Montreal is we've never really overbuilt. We've never really built on spec. So I foresee that over the next little while, we'll still have a strong industrial market. And of course, if you think about, I was actually laughing when Marav said that she didn't go for a walk, but she went, and the kids wanted to go in the pool. And of course, if you see a lot of pool sales, the pool sales have gone up, and bicycle sales have gone up, and so a lot of this stuff is getting delivered online and so on. So these items need to be warehoused, and so I think there's going to be a higher demand for warehousing, and certainly a place where logistics can be handled, distribution and logistics. And of course, Montreal is very strong for that with our port. We're a port city, so
that's right.
The only thing is, of course, and I had the experience early on, is the grocery delivery. I think at some points you were waiting for groceries up to 7 or 9 days, where, normally deliveries took a day or so. So I think once retailers figure that portion out, which sounds like they will, and sort of figuring out that last mile of delivery,
Mm-hmm.
I think you'll see that industrial, and that'll be helped by industrial properties, right? They're going to just get more warehousing space closer to where the population is.
Okay, interesting. Luciano, if somebody wants to get a hold of you, how can they reach you?
They can reach me at the Cushman Wakefield site, cushmanwakefield.com, or they can call me directly at on my cell is probably the best. I was going to give my work number, but of course we're not physically in the office.
Right.
So 514-567-2969, and certainly happy to continue this discussion with your listeners, Terry.
Excellent. Thank you for joining me today, Luciano. It was very much appreciated.
Thank you, Terry. Always a pleasure.
Take care. Guys, I mean, we've quickly ran out of real estate. Next week, we're going to be doing another real estate show. But you know what? We're going to change gears a little bit next week. We're not going to talk at all about COVID. There's not going to be any talk about it. I'm even going to try to get the market update to not talk about COVID because, you know, I think sometimes we need to have a little break from that. I think that it's important. Guys, if you need to reach out to us, you can always call us at the office at 514-680-4674, where Olympia is always standing by to take your calls. And you can visit us online at northeastmortgages.com or .ca, whichever one you prefer. And if you haven't done so already, please don't forget to subscribe to our YouTube channel, which is newsonthego.ca. Till next week, everyone, have a great week. Be safe. Love you all.